Ever felt like your money is just sitting there? Like it's on a bench, watching everyone else run a marathon of financial growth while it's just chilling? You're not alone. We all want our money to work harder for us, to build a future where we're not constantly stressed about bills and retirement. And in today's world, with so many investing platforms popping up, it's easy to get overwhelmed. One name you might have heard is StashAway. So, the big question, is it actually good to invest in StashAway? Let's be real, the world of investing can feel like navigating a minefield. You hear terms like asset allocation, rebalancing, and risk tolerance, and your eyes start to glaze over. That's where platforms like StashAway come in, promising to simplify the process and take the guesswork out of investing. But does it live up to the hype? StashAway is a digital wealth management platform, often called a robo-advisor. Essentially, it uses algorithms to build and manage your investment portfolio based on your risk profile and financial goals. You tell it what you want, how much risk you're comfortable with, and it does the rest. Sounds pretty good, right? One of the biggest advantages is its accessibility. You don't need a huge amount of capital to get started. StashAway allows you to begin with relatively small amounts, making it ideal for beginners or those who are just dipping their toes into the investing world. This low barrier to entry is a huge plus. Another key benefit is the diversification it offers. StashAway invests your money in a range of assets, including ETFs, exchange-traded funds, which provide exposure to various markets and sectors. This diversification helps to mitigate risk, as your portfolio isn't reliant on the performance of a single asset. Then there's the automated rebalancing. This is a crucial aspect of investing that many people overlook. Markets fluctuate, and your portfolio's asset allocation can drift away from your initial strategy. StashAway automatically rebalances your portfolio, ensuring it stays aligned with your risk profile and goals. This hands-off approach can be a significant time saver and stress reducer. However, it's not all sunshine and rainbows. Like any investment, StashAway comes with its own set of considerations. Firstly, there are fees. While they're generally considered competitive, there's still fees. You need to factor these into your overall returns. It's crucial to understand the fee structure and how it might impact your long-term investment performance. Secondly, you relinquish a degree of control. While the automated nature of StashAway is a benefit for many, it might not suit those who prefer a more hands-on approach to investing. If you like to actively manage your portfolio and make your own investment decisions, StashAway might feel restrictive. Thirdly, past performance is not indicative of future results. This is a golden rule of investing. While StashAway might have shown strong performance in the past, there is no guarantee that it will continue to do so. Market conditions can change rapidly, and even the most sophisticated algorithms can't predict the future with certainty. So, is it good to invest in StashAway? The answer, as with most things in finance, is it depends. It depends on your individual circumstances, your risk tolerance, and your financial goals. If you're looking for a simple, automated, and diversified investment solution, and you're comfortable with a hands-off approach, StashAway could be a good fit. However, if you prefer more control, or you're concerned about fees, you might want to explore other options. Ultimately, the best investment strategy is one that aligns with your personal needs and circumstances. Do your research, understand the risks and benefits, and make an informed decision. With that said, thanks for watching, and until next time.